Most domestic banks such as SBI, ICICI, HDFC, Axis Bank, Bank of Baroda and Union Bank among others own mutual funds or have majority stakes in these asset managing companies. Therefore, many of these banks are selling products of their subsidiary mutual funds, and this ranges from 25% to over 95%. Now, according to industry estimates, capital markets regulator have now brought these selling practices of mutual funds owned by banks under its own scanner. So now let's talk about what are the instances of mis-selling and what is the solution for it, along with how can you avoid becoming a victim. We have on board Anant Ladha, founder of Invest Aaj For Kal. Anant, thank you so much for joining in. Can you please explain us the matter and how does actually this mis-selling is conducted?
Firstly, thank you so much for having me on the show. It's always a pleasure to discuss interesting topics with you. See, right now, banks selling a mutual fund product or an insurance product for that matter is not an issue. Issue is when there is a mis-selling. Typically, as per my little experience, I have 3 incidences where a product is being missold. First is when products like Balanced Advantage Fund are sold as an absolute perfect alternative of fixed deposit. And why customers are buying it? Purely because there is expectations of higher returns. Suppose if there is a banker and he is selling a BAF, telling that this is an FD which will give you 10% returns, obviously innocent investor will get attracted to that product. So this is the first biggest mis-selling which is happening. Second mis-selling is, suppose there is a pressure for certain category of funds from top management. So I am selling the exact same funds to the customer without understanding his personal suitability, his personal goals, personal mindset. This is wrong. Suppose there is an investor who want to invest his funds for 1 year, but just because I have pressure and my own personal target to sell equity mutual fund, I am giving that person equity mutual fund. Probably there is some mismatch in the complete system. Finally, whenever there is some loan which is given to a particular customer, asking him for return favors in terms of mutual fund investment or insurance is something which is not aligned with the basic objective. So these are the main 3 kind of mis-selling which is happening. That is why SEBI is now, I'm personally very excited to see that SEBI is taking proactive actions. And now finally SEBI is putting a watch. Probably there will be a checklist or there'll be a list of pointers which will be asked from each bank side, that some pointers like how many mutual funds or what is percentage of mutual fund, in-house mutual fund, which your bank manager is selling. And I think if to improve this complete situation, there can be 3 simple solutions as well. One, we can have compulsory suitability test, risk profiling and goal planning for the investors. Okay. Second, there can be push for more financial literacy. And finally, instead of selling mutual fund because there is a target in mind, we can probably try and help customers in a better way.
So now tell me one thing, explain me one thing, Anant. Now from an investor's point of view, in terms of investor awareness, so that you don't fall prey for all these for all these mis-selling, what is that you need to keep in mind?
I feel you need to be educated yourself.
Sure,
for example, you are doing this beautiful show. If you are a regular viewer of this show, or maybe any other show which is trying to help you in becoming more financially literate, that will help you to be aware of this mis-selling. Plus, you should know that banker is giving you loan. That is his job. He's not doing you giving you any obligation, and there is no need to give for you to give return favors just because you have taken some loan from bank. This is basic financial literacy pointers which you need to understand.
We can discuss more on this, but then Anant, since we have you on board today and we cannot just leave you without discussing any caller queries. We have this specific question from Oman, and it's Gaurav Patel who's asking this question. I think you have the question on you and you have the name of the funds that he's invested. Now, he wants to invest for 5 to 10 years more. That's his time horizon, and he wants to have a good corpus for his retirement. And the SIP amount, I think, goes beyond 1,02,500, and his portfolio has 2 small cap, it has 1 flexi cap, and the rest of the funds, which is a focus fund that you can see. Now, what is his goal for retirement? That's clearly not mentioned, and but the planning has been done keeping the retirement goal in mind. So how can he go about, and how is the fund selection?
I think firstly, the fund selection is good. Okay. It is really good, but on the aggressive side. So I am not sure about his suitability. So probably he need to do his own suitability test, and he need to understand that is he a suitable customer for having a very aggressive portfolio. If it is so, then his portfolio is perfectly placed. He can probably increase the SIP amount which he want to increase in the same existing fund. If we want to adjust his portfolio for his risk, probably we can add a large and mid cap category fund, large and mid cap fund, or an index fund, so that this will give slightly more exposure to large cap funds and more stable stocks.
Okay, now talking about a retirement goal, I have no idea about Gaurav Patel's age also, but then ideally at what age should you actually tie up this financial goal and start investing with what kind of amount? Because retirement goal needs a lot of planning where you need to factor in a lot of expenses which you think could be coming up post 60 when you're 60 years old. So how should one do the calculation? What's the maths behind it?
See, firstly, if I talk about when was the best time was yesterday. Second best time is today. Yeah. So if you are starting early, suppose if you are starting at an age of 25, you will be requiring very small amount, probably 10 to 15,000 per month might be able to suffice for your retirement plan. But if you are starting at an age of 35, depending upon your expenditure, probably you might need to save somewhere around 30 to 35,000. And if you are above 45, then figure will go more than 50 to 60,000. Complete calculation which I am sharing with you right now is keeping in mind your monthly expenditure is ranging somewhere from 60,000 to 1 lakh, 1,25,000.
All right, let's go to another query, which is Piyush, who's asking us this question. He has two kids. One is 9-year-old and one is 2 years old, and I think he wants to invest for their better future. So far, he's investing in PPF, and PPF account has almost 1.8 lakh and 40,000 respectively for both kids. Now, he's not sure if he should be going for any child plans, and he wants us to suggest and to help us know. Help him know what are the pros and cons of having a child plan, and in terms of investment, should he be going for mutual fund or LIC policies or an infrastructure bond?
There is as such no requirement to invest in a specific child fund. Okay. When we start looking for that child in the name of the fund, then probably we put a lot of restrictions in our fund selection. Best thing to do is to start SIPs for your children's marriage and for your children's education. That is the best thing to do. You can probably start with a flexi cap or a multi cap fund, which is an all season fund, keeping in mind that you have at least 10 years plus time horizon. So I personally don't like going with a child's fund because there is a lot of lock-in which is involved. I know that we are investing for 10 years, but anytime I want to change the fund or there is some changes required in my personal financial plan or goal, I can probably do that with an open-ended fund. So I would prefer choosing an open-ended mutual fund SIP for planning for kids' education and marriage.
Can you name the funds?
Sorry, sorry, I didn't get you.
Can you give the fund suggestions?
In multi-cap category, if I talk about a stable fund, DSP FlexiCap is a very stable fund, but you need to do your suitability and risk profiling properly before choosing any fund. Right now, I am talking in general perspective. And if I talk about multi-cap category, ICICI multi-cap is a interesting fund to watch out.
All right, Anant, that's all we have for you today in terms of caller queries. But thank you so much for making time and helping our viewers make their financial plan or portfolio.